Why is it so important to know the key terms when buying a house? It is critical to understand essential housing phrases and how to apply to today's market. For example, when mortgage rate and housing prices rise, it will affect how much home you can afford. Also, appraisal, which is what lenders use to evaluate a home's worth, and inspection contingency, which gives you important information about a home's condition. Those are two terms that have direct influence on the transaction. So let's dive in and talk about some key terms in real estate. Hello everybody, Miley Kakis with Monument Sotheby's International Realty here in beautiful Howard County, Maryland, and today let's talk about some key terms in real estate. Appraisal. Appraisal is a report that is prepared by a reputable third party that highlights the property's estimated worth. It's paid by you, but it benefits the lender. Appraisals are used by lenders to verify a home's value and guarantee that they're not financing more than the property is worth. Closing costs. Closing cost is associated with completing a real estate deal. You can roll them into your mortgage. You should request a detailed list of closing costs, including points, taxes, title insurance, and other fees from your lender. Credit score. Credit score is a score that ranges from 300 to 850 and it's based on your credit history. A credit score is essentially determined by information included in a credit report, which is normally obtained from credit agencies. So knowing this number will help lenders in determining your chances of repaying future loan obligations. Down payment. So typical down payment range from 3.5 to 20% of the home's purchasing price. Investment properties, usually you put 20% down of the total. USDA and VA loan, for example, they provide 0% down payment options, but you must qualify for a USDA loan based on your income. For further information, you should contact your lender. Mortgage rate. Mortgage rate is the interest rate on a mortgage, and mortgage rates are set by the lender and can be fixed or variable. Variable will fluctuate with benchmark interest rate during the length of the loan. It also depends on your credit history which mortgage rate you will get. It is preferable if the rate is as low as possible. Pre-approval letter. Pre-approval letter is the letter from a lender stating the amount of money they're willing to lend you for a house loan. In today's competitive economy, this is a very crucial step. It's so important. So be ready. Inspection contingency. Inspection contingency, it's a clause in the contract requiring the completion of an inspection. It is paid by you, the buyer, while it may be tempting to skip the house inspection when in a competitive market. The home inspection is so important because it will inform you about the home's current condition and what future repairs need to be done. Affordability. Based on the most recent income and mortgage rate statistics, this metric will determine whether someone earns enough to qualify for a loan on a typical house. As prices and mortgage rates climb, you will be limited in how much you can spend. Equity. Equity is the difference between what is the value of your home and what is the total amount of liens against it. So with today's price increases, many homeowners are learning that they have more equity than they imagined, and they're taking advantage of it to relocate. If you're unfamiliar with the terminologies used throughout the process, buying a property might be scary, but you should utilize the services of reputable real estate advisor so that you have an expert guide and sound guidance for any concerns that may arise. If you have any questions regarding real estate or architecture, because remember, your agent is also an architect, please reach out to me at 443-850-9968.